How has Dutch Bros changed its real estate strategy? Hello, this is Jonathan Mays, editor-in-chief of Restaurant Business. And in this week's episode of A Deeper Dive, I speak with Christine Barone, the CEO of the drive-thru coffee chain. We had a great conversation. We talked extensively about how the brand is refining its real estate strategy and what that means for the company and its customers. We chat about fortressing and why Dutch Bros believes building more locations in a market is important to the brand and its customer base. We talk about competition in the beverage space, particularly drive-thru beverages. We chat about the company's strong first quarter and what drove those sales, hint boba tea help, and how that reflects consumers' changing beverage habits. We also talk about customization and energy drinks and all kinds of things. We're talking drive-thru drinks on A Deeper Dive, so please check it out. All right, we're here with Christine Barone. Christine, welcome to the podcast.
Thanks so much for having me, Jonathan.
All right. So I know I wanted to talk about real estate, but first I got to ask. So you had a really good first quarter, right? Certain of your competitors did not have a good first quarter. Do you think that like do you benefit like when one of the big coffee chains struggle, or do you think it usually just goes that you follow one another with some variation, and this is are you getting customers from Starbucks, I guess is my question.
No, I mean, what I would say and take a step back is I do think that there are like macro factors, obviously, that impact the entire industry. And then I think it's always our job as leaders and as companies to really understand who our customers are and to deliver awesome products and awesome service to them, no matter what the macro background and conditions have to offer. And so, as I look at kind of what drove our quarter, I think it really was a lot of things we were doing internally, in being really focused on making sure that our broistas and our crew were successful with the promotions that we did, and making sure that that we were offering things that our customers really loved. And so when I look at that success, it was a lot of things kind of coming together at the same time. So the innovation, we launched protein coffee, we launched boba, the rewards program, we did a refresh last year. And so we're really watching, how our customers were behaving and putting out offers to them that they enjoyed coming in for. And then finally did a lot of work on paid media and driving brand awareness in new markets. So I think our success was really most related to the things that we were doing internally to help drive that.
Mm-hmm. Mm-hmm. Your boba was so popular that you were running out of boba, weren't you?
We did start running out of boba a bit, and so we have decided to keep the strawberry boba on the menu, and are working to make sure that we're fully back in stock in that.
Yeah. Yeah, it's just interesting. I mean, that's sort of, it's kind of, your quarter almost reflects sort of the broadening of the whole beverage market. I find, by the way, the beverage market endlessly fascinating right now. You got fewer drink orders inside regular restaurants. People aren't ordering beverages as much when they go out to restaurants for the most part, unless they're going to a beverage restaurant. And they're going crazy and ordering all kinds of weird things. Boba, I don't understand it. I'm too old. But cold coffee, weird energy drinks, things like that. I mean, it is endlessly fascinating.
Many would not call them weird, Jonathan.
Well, I would. I'm old. I'll call lots of things weird, but I mean, it's great. I mean, from a business standpoint, the innovation that we're seeing in the beverage market is amazing to me. And all of the number of the variety that you get these days when going to, a coffee shop like yours is actually pretty incredible.
And I think it's not just about the variety, it's really that ability to customize. And I think one of the things that our customers love the most about Dutch Bros is that conversation with the broista. And so you're really, when you drive up in your car, you're starting to have a conversation. Sometimes you really know what you want and you're going to order exactly that. And then a lot of times we'll have people come up and say, "Hey, I'm feeling kind of like this. Can you help me out? What would you do? How would you do this?" And I think our broistas are just so incredibly brilliant at like putting different things together and really listening to what a customer wants. So if I say I want a coffee-based beverage, well, they're not going to offer an energy drink to me. But that ability to really customize and make something your own, not just from a flavor perspective, but also from a visual perspective. And so I think that's a lot of like what's happening right now in beverage is just that ability to so customize and then to share with your friends. So to say, "Hey, I went into Dutch Bros today and here's what I got. Just love this. You guys should go try it." And so I think that sharing piece of it is really a lot of fun as well.
Are you trying to keep up with your customers? Your customers keeping up with you? How does that work? I mean, which one is it?
I think that we're in a really interesting time, right? Where it's a bit of both. And I think it starts with our broistas are so incredibly well trained and knowledgeable on our menu and all of our offerings and how people might ask for things. But we will see that some TikTok trend starts and someone creates a drink at Dutch Bros that then goes a little bit viral and or maybe a lot viral and that will start to get orders of a drink that is something that, oh wait, okay, what's that? And we'll make sure that we're sharing what those things are. And a lot of times the customer will come and share, here's what that drink is. So it's a little bit of both nowadays. And I think that ability to create your own is something that customers really do love.
Mm-hmm. Mm-hmm. All right, let's chat about real estate for a minute. So
Yeah.
you guys have done are doing a lot of different things. It seems like, and maybe I'm wrong, but one of the bigger things that you're doing since you've become the CEO is that you're changing the real estate strategy. Can you talk a little bit about that?
Yeah, and I would call it we're refining the real estate strategy and
Mm-hmm.
really something that's naturally going to happen over time. So as we get more data in and have more of an understanding of our performance, in new markets and mature markets and all of these different circumstances, we just have a better way than to predict what's going to happen next when we go into another new market. And so that's really a lot of what we're doing is that we have had such a rapid pace of growth that we're ensuring that all of our real estate modeling is keeping up with that rapid pace of growth and benefiting from all of those learnings that we have. And a couple of things that have come out of that are really one, the order and proximity of which we place new shops. We've just learned a lot about how that drives performance in new shops and what's that ideal time frame to go into the next one that's a little bit closer, all of those things. So we're doing a lot of adapting kind of just on what is the right pacing and sequencing of opening shops as we go into a new market. The second piece that we're looking at is just the way that we fund our sites. And during COVID, as everyone I think has talked about across the industry, just lots of delays and hard to get equipment in and people in and all of those kinds of things. And so we really moved a lot of our leases to ground leases.
Hmm.
And so we are shifting slowly because real estate pipelines shift slowly into a bit more build to suits and working with our developers to help build out those projects. And then finally, we're starting to explore some other formats like in caps. Our franchisees have done a number of these and have been really successful. So you have a drive-through in cap where you're kind of sharing that co-development with some other brands or uses that make sense for Dutch Bros.
Mm-hmm. That would be very different from you, end caps, wouldn't it? I mean, you're kind of almost known for these little.
Well, it will not be a majority by any means of
Sure.
development. I think it's more just as we grow that, as we go into a market, the first units are going to be the traditional standalone drive-throughs that really work well for us. But as we're infilling into a market and getting to, site number 15 or 20 in that market, having some alternative formats that might fit in places where it's harder to put a drive-through or harder to find the right site is something as we grow that we're just going to be thoughtful about.
Mm-hmm. Mm-hmm. Yeah. I mean, it's kind of important to be flexible Like I
Yeah.
always think that flexible real estate is always the better option because you should choose real estate based upon how good the sites are. And if you're just too married to one idea or the other, it's going to be a lot more challenging to grow. You might end up paying more than you should. You might end up getting a site that's not quite to standard, or you could end up putting yourself into an entirely leased boat and then end up in bankruptcy several years later after running in a bad endless shrimp promotion. Not that I'm
But
biased in
that
that.
that so I no, I completely agree with you that I think that flexibility piece in real estate, and I think it's that combination, right, of having making sure you're always going after the best site because that's what's most important. And then two, again, going back to really understanding your brand and what is that for us, it's so important the working environment that we have for our broistas and the fact that they can listen to their own music, that while they're making a drink, they might, be able to move a little bit to that music as they're listening to it, and things that closed environment really allows, I think, to have a really nice place to work.
Now, what's the benefit of the ground leases? Why make that decision?
Yeah, so again, it really comes back to I think where what you shared is
Mhm.
one, it's always about the best real estate, and
Mhm.
and oftentimes a ground lease is going to be that's the way that we can go after and get the best real estate. The other piece is when we go after a ground lease, we really are controlling kind of the timelines and that project more ourselves, and so that's been an attractive part of that for us. And then ground leases, you have more upfront development costs because you're funding that more yourself, but you're making a trade-off because the rent is lower for ground leases. And so
Right.
over the long term, that's something that stays with you for a long time, that lower rent, which is nice.
Yeah. Right. As I said, lower rent is a good thing, I think. I generally.
Yeah, I mean, and you can sit back and compare the two, and we do a lot
Mhm.
of that work and look at, are we getting the right funding rates from our developers and things like that, given, we really are a great tenant. We're there for the long haul. And so those rates, I think, as the brand has become more known and our history of really being a great tenant has been more known that's working well for us.
Mhm. So I want to talk about the market entry thing now. But are you still the plan still fortressing, or where is that at? Because the company had gone through had been aggressively opening new units in more mature markets, and some of these markets were a substantial part of the company's same store sale base, and and so as they built these new units in these existing markets, it was pulling down same store sales. Is that still a strategy, or you're moving away from that?
Yeah, it's absolutely still a strategy for us. So a couple of things. One, this is a frequent occasion and where
Mhm.
customers like to be nearby and they like you to be very convenient for them. So not only from a drive-through perspective, but also convenient to where they live or work or doing something fun. And so for us, the fortressing is important because one, continuing to build density in markets is something that's important to our customers and to our business model, to our supply chain, kind of makes all those back end things easier as well. And then two, there are certainly shops that we open that open at just such incredibly high volumes that really for us to be most successful, we would love to put another shop in very quickly to kind of split those volumes across the shops. And I think when we're discussing some of the refinements to the real estate strategy, it's where maybe we've gone in and already have like a pretty good base of shops, and then just being really thoughtful about, hey, if we've rapidly built up, 8 shops within this 10-mile radius, when do we put that ninth one in? And where exactly does it go? And so that's where, as I shared kind of to start with on the real estate, it's really more of a refinement.
Mhm.
And it's because we have just much better data and history now of what happens when we try out different things.
Yeah. Yeah, it's easy to forget, but I mean, there's a reason why we have in many markets a Starbucks on like every corner, or a Dunkin' on every corner. I mean, at the end of the day, And when I travel, I don't want to go, I really do not want to go very far for my coffee. Christine, I need that now. Okay. I don't want to wait the extra 10 minutes to get
Yeah, you want it right
further.
now.
Yeah, dang right. I need it right now. Frankly, it would be great if it just
I
appeared in
wish
my
I
hand.
could make you one, Jonathan.
Yeah. Well, afraid. Yeah, I'm probably coffeeed out this morning. I've had my fill, which is an extraordinary amount, by the way. I drink a lot of it. Uh, but no, I mean, it's a good point. Like, I mean, that speed is like really important. The ability to get this stuff very, very quickly is sort of key to your business.
Yeah, and I think it's the ability to get it quickly. It's also, when you think about the different day parts throughout the day, there's different needs. So, in the morning where I'm on my way to work or on my way to school, I have a routine, and I likely, I'm not going to wake up an hour extra, to drive somewhere and then wait too long to get that coffee, because
Mhm.
I think many of us would love that extra hour of sleep. And so us being more convenient, making sure that we're in the right places. I think sometimes in the afternoon, we do have a little more time. Sometimes those beverage occasions are a little more social. You're going with your friends, and so you might be willing to drive a little bit longer, and you might be willing to wait a little bit longer for that. But those are really things that we're continuously working on, is making sure that our shops are more convenient, and then also working on our speed and helping to get our customers through our lines quicker.
Mhm. So let's chat a little bit about the new market stuff, because you did a number of different things in new markets. You changed how. Now, correct me if I'm wrong, but when you were going into markets like Texas, you actually changed how you market your new locations. Yeah, could you talk a little bit about that?
Yeah. And so we are, what we have learned is, and this probably is fairly obvious, right? That our brand awareness in markets where we're much newer is much lower than in markets where we've been for a long time.
Mhm.
And it might be that you've seen a sign and you've driven by, so you've got some curiosity, but you really don't know what Dutch Bros is yet. And so a couple of things that we've done specifically for new markets and to help introduce customers to our shops, because we do see in new markets that once someone knows Dutch Bros, they come quite often. They look a lot like our customers in our mature markets. And so a few things we've done is one on the paid media. So we were doing a lot of retargeting before. So really talking to customers who'd already been to Dutch Bros and reminding, which does work. But we've really broadened that to kind of open the funnel up to really finding customers that might look like customers that are already coming to Dutch Bros, but just don't know who we are yet. And so kind of serving them a little bit more information about Dutch Bros so they can find out about who we are. The second piece is we have a highly successful rewards program, and that's a really great way that we can talk to our customers. So we had started out that program with a welcome drink, and we've brought that welcome drink back. Again, we have very high frequency, and so it's really nice to just invest. It's basically investing in sampling and saying, "Hey, come try us, come join our rewards program. Let us tell you a little bit about ourselves, and we'd love you to come and try a drink with us."
Mhm. Um, yeah, that rewards program, by the way, I think I might be wrong, but I think that on adjusted for chain size, I believe the Dutch Bros loyalty program might be the most popular in the industry right now. If there is one, because like I can't remember the numbers off the top of my head, and I am sure you do, but your percentage of money spent at a Dutch Bros by a loyalty member is like some insane number,
Yeah,
like
so
69% or some.
it's 66% of all of
Hmm.
our transactions are with our rewards members. So they're showing their QR code and sharing that they're part of the rewards program. So it really is an awesome amount. And I don't know the exact numbers across the full industry, but I do think that when you look on a shop, rewards members per shop basis, that it's very possible that your hypothesis is correct, that we really have a lot. And one of the things that's, I think, really fulfilling for us as a brand and a team is that percentage of rewards penetration with the rapid growth in so many new shops. Typically, you would expect if you were growing this quickly that would actually be coming down. And the fact that it's holding steady and even this quarter, ticked up slightly is something that we're certainly very proud of.
Mm-hmm. Now, is there a percentage at which that number is too high? Because you want to get a percentage of new customers. And again, not to keep bringing up this other coffee chain here, but Starbucks currently has a problem with occasional users, and it has hammered their sales. Now, we can discuss why that is, and I have my own theory, which I've said many times. But and I think it has nothing to do with anything that they can actually deal with. But still, they still have an occasional user issue. I mean, is there a point at which you like a percentage that might be a happy percentage, or are you happy with that number going up?
Yeah, I think we're very happy with where that number is right now, and especially given our growth, I would expect it to stay, somewhat around that number because
Mm-hmm.
our more mature markets, the number's higher, the newer markets, the number's lower. And so the goal is to kind of continue to work on that. But we are very focused on bringing in new customers to the brand. And we look at a whole lot of things to understand how we're doing on those metrics. So, we look at customer satisfaction in new shops versus existing shops, all of those types of things. We look at how the rewards members are using us as a brand. And I think we still have opportunities to even understand some of those things better. Like we see interesting things like our Rebel, our proprietary energy drink, has lower usage in new markets and so our customers, are still learning about that and trying that. And I think it's a new thing to the market to really customize energy drinks. And so we have a lot of great education to go still on that.
You guys need to call yourself an energy drink chain. You'd watch the customers just roll in my opinion.
I do think sharing like how much I love that you shared that because I agree with you. Like, I think it's such an important part of who we are. I have the lucky piece of having 3 teenagers myself and get to watch what they get to drink every day. Maybe some wouldn't call 3 teenagers lucky, but it's a lot of fun to actually see. I think to the point where we started just the variety of beverages, getting to watch their friends come in and all of that. And they really love the energy drinks and that ability to customize.
Oh yeah. They love the energies. I am all about the energy drinks, and I think that it's an area where the restaurant industry is behind, and I think you guys are probably the leading one, just in terms of having energy drinks inside. By the way, nothing makes me feel older than looking at the flavors of energy drinks, except maybe passwords. But because
my son's favorite is a Shark Attack.
Yeah, see, Shark Attack. What does that even taste like? What does it taste like?
Well, I think that, what he shared with me, the reason that he loves it is we have a pomegranate drizzle on top, which is a little bit of the Shark Attack. And so just loves that. So I think, it gives energy to finish up your homework. And, at the same time is a little bit of sweet and also is a lot of fun to look at.
Yeah. Flavors like radioactive rainbow unicorn or whatever. Now, don't you sell more of those in the afternoon though, right? So you got your more traditional coffee beverages, which are mostly cold these days in the morning, but like in the afternoon, the kids go and get themselves an energy drink and then they're up until 4 a.m.
Well, and they also drink them in the morning too. So, so it is a mix, but yes, you're correct that the energy drink is a little bit more skewed to the afternoon, but definitely see, I think go to any high school during like drop off or when they're pulling in and just look at the colors of what they're walking into school with. It's pretty amazing.
Yeah. Well, probably that energy drink balance probably going to continue to shift in the morning as they get older, because it is definitely a younger crowd that likes the energy drinks, and they're probably not going to let go of it, because once you like something, you get you just keep
once you love something, you love it, right? And I think we've seen that over time, right? That as I've been in the beverage business for many years, and certainly in food and beverage for a long time now, watching kind of those cold coffee habits that we're developing for millennials that have really stuck with them, and then the rest of us adopt those habits as well.
Not me. No way.
Not
I'm
you.
a dinosaur stuck in
See,
my
I do,
ways
Jonathan. I change.
using this.
Got my cold morning coffee here today.
Yeah, that's great. Hey, you're representing. That's good. That's very good. So one more question. Now you happen to be, I believe, and I actually have to do the math, but I believe beverages probably were the fastest growing sector in the industry last year, if not one of the, just beverage chains. And if not, it's one of the fastest. But then drive-through beverages in particular are insane right now. You've got a number of competitors that are building all over the place. How do you combat that? Or is that a challenge for you going forward? Or what does that do? How do you operate in a situation like that?
I think that it's always interesting to watch what others are doing and to learn from what they're doing. But I think it really comes back to like who are we at our core and what are our strengths? And I would say, in particular, as new competitors are starting up and things like that, that one of the really unique things about Dutch Bros is we've been around for over 30 years. We have such an incredible base of people to go and open our shops in new markets that truly love the brand. They started as broistas. We have an operator pipeline of almost 375 operators that have, on average, 7 years of tenure with the brand. And I think that, as much as we try to understand performance across brands and everything, it always comes back to the people, right? And who are the people who are running the business, and what's their ability to connect with the community and with our customers. And I think that 30-year history and having so many people ready to go open our new markets, it really is, I think that is what our competitive differentiation is. We also I think have a wonderful history of giving back to our communities. We just had our Drink One for Dane Day last Friday, so a week ago, and I got to spend some fun time in shops and making drinks for our customers alongside our broistas, and it's just such a special day for us when we're able to give so much back to our communities.
Right. Super, Christine. This was great. Appreciate the conversation as always.
Thank you, Jonathan. Have a wonderful rest of your day.
Cool. And also a reminder, it's Dutch Bros, not Brothers, just for the record. Learn from my mistakes.
Thank you so much. It is Dutch Bros.
I'm here to clear up mistakes. Thank you very much.
Appreciate you so much. Thanks, Jonathan.
And that should do it for this week's episode of A Deeper Dive, which was edited, as always, by Spoons. Artwork by Nico Hines. You may find this and other episodes of the podcast on our website at www.restaurantbusinessonline.com/article/deeper-dive. And please subscribe on Spotify or Apple Podcasts. I'm Jonathan Mays, your host, podcast producer, and the editor-in-chief of Restaurant Business. Thank you for listening.